Hi, everyone. Welcome to another episode of the Sports Tech Allstars Podcast. It's that time of the year. We're leading up to our first major report of the year. Well, actually, that's not true. We already published the Indian Sports Tech report, but let's say one of our flagship properties. It is the Ecosystem Report time, which always comes out at the end of April. And in the lead up to the Ecosystem Report, we always have a bunch of innovators that we want to speak to, people, let's say, who are the movers and shakers in the sports tech and sports investment landscape. And one of those, a very sharp mover and shaker, forgive the pun, Lloyd, is Lloyd Danzig from Sharp Alpha, the managing partner, a fund focused on specifically a segment within the sports tech industry, sports betting, but they do a lot more. I'll let Lloyd speak about that. Welcome to the show, Lloyd.
Great to be here. Always good to see you and catch up, and thanks for having me.
Lloyd, we've been interacting, I want to say, for the best part of 5 years or so, probably more than that, like since the beginning. We came out on each other's radar, and I've seen all the very cool stuff that Sharp Alpha has been doing. Why don't you walk us through what exactly that is? And maybe as a lead up to that, talk about your own background of how you set up this fund.
Yeah, so we are a venture growth equity firm based in New York, focusing on sports, gaming, and entertainment. We use the phrase competitive entertainment to describe the umbrella under which we invest, which really speaks to what we find interesting. We think that when people have skin in the game, when people lean forward in their seats, when they're enraptured by caring about winning and caring about the outcomes, that's when people enjoy themselves the most, and that's also when products show the stickiest retention and the best unit economics. And so that's what we're all about. We manage capital on behalf of publicly traded companies outside the US that are looking for access to interesting opportunities in these sectors, and also for many of the sports team owners, restaurant, casino, hotel group owners in the US who again are looking for innovative companies to partner with, acquire, and things of that nature. To your point, we started with a slightly narrower aperture a number of years ago. Our first fund was more specifically focused on real money gaming, sports betting, casino, fantasy, sports lottery, things like that. All of those have that competitive entertainment thread in them. We are interested in those areas because we think they are vehicles and shortcuts to the type of competitive entertainment that we see as being one of the most important facets of the consumer ecosystem in the coming years. And now that we're deploying out of Fund 2, we have widened the aperture a bit. We still look at real money gaming, but other areas, experiential hospitality, fan engagement, venue tech, anything B2B or B2C that ultimately comes down to people deriving utility from caring about outcomes and caring about winning. But just briefly, I spent most of my career as a professional investor, previously on Wall Street in kind of more institutional, traditional fixed income roles, and then for the last 7 or so years doing earlier stage sports, gaming, and entertainment investments.
Yeah, if there's any doubt about that, all you have to do is go to Lloyd's LinkedIn page and look at his profile experience, and you'll see the word investor appear like a gazillion times. So clearly, the man's been active in that segment. And in fact, I think the timing of our episode, and we reached out and kind of organically found out that you guys had added one name to that list very recently. So, Lloyd, let's jump right into that.
Yeah. As of the time that we're recording this has not become public news yet, but always trust you guys under the veil of confidentiality. And by the time this is published, of course, we will have announced a $34 million investment round that we recently led with the Daily Mail Group over in the UK out of their venture arm, DMG Ventures, into a new concept that the Jolliffe brothers have been working on in stealth mode for the last few years. The Jolliffe brothers are the founders and inventors of Topgolf and subsequently Putt Shack, which, similar to Topgolf, is a digitization plus F&B around mini golf. And now for the last few years have been working on taking that approach and doing what I think is their boldest and most ambitious and fun concept yet, which is applying that tech to pool tables. The game of pool is very accessible, can be played by anyone. It's very widely recognizable, and yet it's generally been relegated to sort of smoke-filled back rooms and dive bars. And we think that makes it absolutely right for a total refresh and reimagining. And so not only are the Jolliffe brothers, who again are legendary founders in the space involved, they are joined by the CTO, Paul Hawkins, who previously founded Hawkeye Technologies, which sports tech fans will no doubt be familiar with, was acquired by Sony and is the computer vision ball and player tracking solution that you see on TV when you're watching tennis or soccer football matches or now NFL games and are looking at digitized replays that decide if a ball's inbounds or out of bounds or offsides or onside. Most of that is provided by Hawkeye Technologies. And obviously, there's a lot of overlap in the core competencies involved there with what you would want in a sort of Topgolf style concept. And then have 7 executives from Topgolf, F1 Arcade, and Putt Shack who have come over to be involved in running the day-to-day of the business. The team will be launching a flagship property in London to start off and then expanding elsewhere. And I don't want to speak out of turn. I'll allow the management team when they're ready to discuss more about those expansion plans. Once you see the tech, once you see the game, once you see what a pool table can become, with the use of proprietary state-of-the-art computer vision and augmented reality projection mapping technology, we think, and we have already seen, people will wonder, how did they ever use a traditional pool table that isn't capable of playing mini games and allowing you to order your food straight from the pool table and bet against your friends and things like that. And so we are incredibly excited and honored to be investing alongside an amazing group that includes not only the Daily Mail Group, but David Blitzer, owner of the 76ers, Crystal Palace, Simon Sports, owners of Ipswich FC, active partners, were the first investors in Soho House, a long list of industry experts and strategic capital that have come in alongside us. And we see this as part of a broader trend in what people are calling entertainment or competitive socialization or top golf for blank, depending on who you're talking to and when. And we have many thoughts about other concepts and broader trends in the space as well. But for now, what we are most excited about and have spending quite a bit of time on is the $34 million investment round that we led recently with the Daily Mail Group, and are excited to hopefully have you guys out to London for the grand opening not too long from now.
I will be there, best believe it. First thing, Lloyd, you already, hey, I don't want to put you on the spot, but you kind of let the cat out of the bag already. It's already up on your LinkedIn. So I know there's a embargo on the PR stuff, but hey, some secret sleuths would have found out that it's already happening. Number one. Number two, I'm not so sure about the entertainment one. Like I've heard sportainment, which I kind of give Andrew Petcash the credit for. That's the best term I've heard. Top Welfare X and the competitive socialization. Actually, I really like that one that you mentioned. But entertainment is a bit iffy. But most importantly, jokes aside, I mean, what an incredibly credible group that you've. I mean, between the Jollof brothers, between the founder of Hawkeye, the investor group that you've just mentioned, and the Blitzers, the Daily Mail group, yourselves, of course, of all that together, but completely separately. Because I think I mentioned to you, I got introduced to Tim and the team at Pool House. I want to say 6 months ago. It was definitely maybe September, October last year, maybe before that even. And immediately it struck me that this has to be a thing. Like the idea, and I saw this just purely this social activity of pool. I played it all growing up, just as friends, and you kind of hang around at a pub, get a beer, even before we could drink, just go to the pool club and shoot some pool or snooker. But even today, at a bar or at a venue or at the WeWork that I go to, there's a pool table. It's usually busy. So it feels like there is still appetite for the sport, and all it needs, or this game, all it needs is this update. And part of this broader trend that you touched upon, and we can debate the term, but why do you think there is so much interest in this category, this top golf for X or competitive socialization or sportainment, whatever you want to call it? Why do you think that's so hot right now?
I think that accelerated by and coming out of the pandemic, but also part of just broader trends in consumerism, people want to get back out there, put their phones down, silence notifications, find their tribe, meet with like-minded individuals in curated, maybe exclusive spaces or spaces that filter for a certain type of audience. They still want to have a drink or two, but especially with the younger generation, heavy alcohol consumption is no longer the primary centerpiece for socialization. And so what is replacing it? We find for the most part forms of competition, running clubs, padel clubs, and in this category, playing games like golf, baseball, basketball, football, clay pigeon shooting, rowing, surfing, you name it. And by the way, there are top golf concepts in market now for all of those sports. So they all exist. And it's because it's part of this trend of people wanting to go out and do something in a third place that's not their house, it's not their office. And again, they want to have a drink or two, but there should be something else that is the centerpiece for the conversation, for the socialization. And few things capture people's attention the way active, in-person, competitive forms of entertainment do. So I think that's part of the broader trend. We think that pool tables are, or the sport of pool is especially well equipped to a successful concept in this space because, to your point, in sort of how you were describing, anyone can play pool. Men, women, children of any size. You could even roll the ball if you can't hold a pool cue. You could play in high heels. You can play in dress shoes. You can play in a suit. It doesn't make you sweaty. The food and beverage consumption and the socialization is very intimately integrated into the activity itself. Some of the other concepts in the space, you sit down in the racing simulator for 10 minutes and then you get up and you move over to the part where you socialize and have a drink. Others, which we think are just more conducive to more dwell time and higher margin F&B spend, have it more integrated. So I agree. It was one of those things that when I saw it, and especially once I went to demo the prototype and play with it myself, I said, how is this not more pervasive? And for that reason, one of the other differentiating factors that caused us to lean into this one, and again, it doesn't take away from how much fun all the other concepts are to visit. I've never went to a single venue in this space and felt like I didn't get my money's worth. They're all a lot of fun. But in terms of what can generate multi-billion dollar outcomes and venture scale returns, Topgolf's most successful, highest margin business line is a business line called Top Tracer, which is actually the only business line that Callaway has now retained after acquiring and then divesting many of the assets. That is the white label solution where any driving range in the world that wants Topgolf functionality, meaning the ball tracking, the screen that shows you how far the ball goes, the ability to play mini games closest to the pin against your neighbor, things like that. Any driving range can pay $200 per tee box per month to retrofit Topgolf functionality onto that tee box. And that is a 60 or 70, 75% EBITDA margin business because it's just a white label out of the box solution. And having learned from that, one of the core features about the Pool House business model is that they are not building pool tables. They are not building tech-enabled pool tables. They have built a array of cameras and projectors that sit above any pool table. Long-winded way of coming back to the point that we were making before. Since it seems like something that should obviously exist, and as soon as you see the product and the prototype, you say, man, this is awesome. There is now a line out the door, proverbially, of hotels, casinos, traditional pool halls, restaurants, other venues you wouldn't even expect, or maybe you would. You seem to come across a lot of pool tables where they're saying, we already have 12 pool tables or 17 pool tables. Can we convert all of ours to look like that and link it to our player account management system or our CRM or our loyalty program? And so one of the things that got us incredibly excited about Pool House and what we look for in terms of opportunities in the category that are capable of producing venture scale returns, it's where is there not only a great concept with a great team and great ability to produce corporate event spend and F&B spend and frequent visits, but where is there also a third-party white labeling solution that has a mass market potential for high margin distribution? And we think that's one of the key factors that will differentiate the successful companies from the ultra successful companies in the space.
Super interesting. Like I said, I spoke to the team a while back, and I don't remember this aspect, at least in the brief conversations we had, maybe two or three, that it's not just self-branded, but you could go and put this tech into any existing, on top of any existing pool table, which immediately just expands the market so much. No, super, super interesting tool or solution. And like I said, sign me up whenever you're going to be launching or even pre-launch. I'm going to be in London in May. Maybe I'll hit you up or head up the team and try to get into a demo. But we've spoken a lot about Pool House and we've spoken a lot about this broader trend of this sportainment, whatever you want to call it, this active participation of the consumer. We've seen it in a couple of different ways to create those immersive, engaging experiences. You've seen COSM, which is passive, where you're kind of consuming sports but doing it in a really interesting way, and this is more active.
Have you been, by the way? Have you been able to watch a game at a COSM location?
No, I haven't been to the US. I think right now it's only in LA, right? And I think they
LA and
opened a couple,
Dallas, and then
and yeah,
Atlanta and Detroit soon. I'm not an investor for what it's worth. Very cool.
yeah.
Really,
Again,
really
only
cool.
heard,
It's a
only
really
heard.
amazing experience.
Sorry,
No, go.
sorry, no, not to interrupt you, but only heard good things. And the price point, $11 to $33. That's the one that really gets me. That you can do this because it's obviously high tech, high investment, and then you can do that
I
at that
think
price point.
I think the premium seats that have the full immersive experience that are both kind of in the middle level and the center are a bit more expensive than that price point on game day for what it's worth. But even so, I do agree. It is. I don't think the numbers are public, so I won't share. But it's orders of magnitude cheaper to build a COSM location than a Sphere location. Obviously, you're not talking about nearly the same level of capacity either. But I think it's a really interesting one, and a big question we've been wondering is how well might they succeed in international markets. Americans love big sports bars with big, gigantic screens and as many TVs as possible. That's not as common in every other culture necessarily. And I think a really fascinating question in COSM's trajectory will be what is the adoption overseas? I think they're going to continue to do very well in their US locations. I think the international expansion will be one of the main drivers in terms of whether some recent investors end up happy with the return they derive.
A great point. And by the way, apologies if I've got the price point wrong. It was told me first person by somebody who had been to one of these venues not so long ago. So probably maybe it's differently priced for different types of events. Depends on what's on the screen, etc. I think they were watching a live NBA game, or I say live NBA game, but they were watching a game in one of these arenas that was going on live somewhere else in the country. Jumping off that, so this whole trend that you've talked about, we've spent a bit of time on, but I also know that you have quite an active portfolio as well of other companies that you've invested in over the last few years. Any ones that you want to throw out there, just to talk about your thesis in general,
Yeah.
beyond the competitive gaming one, which by the way, I love.
Excuse me, sure. Just to maybe give a few shout outs to some companies that are doing great work. CFIN Studio is a streaming infrastructure company that some of the largest sports leagues in the world rely on to operate, distribute, and monetize their free-to-air streaming channel. So Formula One, most notably, if you find yourself watching their streaming channel on Roku or Samsung TV or Pluto TV, that is programmed, operated, digitally fingerprinted, distributed, monetized by C15 Studio. Same for DP World Tour, One Championship, and they'll have a major announcement, a partnership that they're doing with a large sports network that will be significant not too long from now. Stay tuned for that and for other channels that they're involved with. Verdict MMA is a company not enough people outside the combat sports space are aware of. If you are a MMA, if you like PFL or UFC, check out the Verdict MMA app. They do a number of different things in fan engagement, but their flagship product is something called the Global Scorecard. During MMA matches of pretty much any league or series, in between rounds, they ask their hundreds of thousands of users, what do you think the score of the last round should have been? And not only do they aggregate that so that you can see your friends' scores and the average scores among your friends and the average scores among all the users, but ESPN and other outlets pay them for that data and show it on screen during the match. And they say, here's what the judges said, and here's what the Verdict MMA Global Scorecard says. And anytime there's a controversial match, Joe Rogan and all these other commentators, they talk about Verdict MMA. They say, what was the Global Scorecard? And it's not something they make money off of on the consumer side. They monetize it B2B by having media outlets pay them to use the data and sell ads against it. Really, though, it's more of a hook to get users into the ecosystem and monetize through other ways. But MMA fans love it. It is a really great product for diehards, and we think one of the most organic examples of a certain type of product market fit that you don't see every day from a new entrant in sports. Grid Rival is another company we're involved with that has a similar approach, but in motorsports. If you think you know how well different F1 drivers will do in the upcoming race, Grid Rival's one of the best places to monetize that knowledge. You can do various, will this driver come in better or worse than third place and string those together. They recently were announced as the official fantasy sports partner of IndyCar, which itself just signed their largest ever media rights deal with Fox and is investing heavily in and around the ecosystem. The Grid Rival season-long IndyCar contest, I believe, is sponsored by Firestone this year. So again, if you are a diehard motorsports enthusiast, if you use Prize Picks and FanDuel and DraftKings and you feel like this wasn't made by someone who loves motorsports, I want this, but a better version of it, created by diehard motorsports fans. Grid Rival's probably the home for you. I don't want to rattle on too long here. I'll maybe mention two others. Almost Friday Media is a humor-centric media company, similar to Barstool Sports in a way, but we think and hope maybe a little smarter, a little more elevated, a little more monetizable at scale. They do all sorts of sports content with many of the top athletes, the teams. They have a large deal with MGM that mimics Barstool's deal with DraftKings. They have their own sports bars. They have their own beer. They have a great hockey podcast that is popular among hockey fans called Red Flags. They run Country Club Adjacent, which is a popular social media account among golf fans, and really great humor-centric intellectual content that is very sports adjacent. And then finally, maybe just for now, we're another company we were the first investors in called Kiro Gaming, which provides in-play prediction capabilities to sports teams that want to allow their fans to predict, will the next play be a run or a pass for the chance to win free tickets, and to sports books who want to offer people the ability to bet real money on those micro predictions. Will the next basket be a 2 or a 3? They are partners with the Yankees and Yes Network, with Caesars and everyone in between. And they recently received investment from Susquehanna International Group and Chicago Trading Company, who are two of the more sophisticated algorithmic trading firms that leverage similar data science techniques to what gives Kiro their edge. So that's a bit B2B and B2C in and around sports, gaming, entertainment. As you can see, the common thread there is that the end users are deriving utility from caring about who wins, caring about outcomes. And it's really the competitive spirit that is the common thread among those investments.
I was just going to say, actually, every use case that you just explained, every investment that you explained, immediately tied up back to me for what you said at the start of the recording, was that how do you bring a fan to the edge of the seat? And if you can do that successfully, any product can do that successfully, that's it. I mean, that anything that drives engagement, anything that drives interaction, and this is certainly a broader trend that we've been talking about in our content for a while, the shift from the passive fan to the active fan, and how fans want to get more involved. They want to see their voice heard. They want to see their opinion represented in some way and then act on it as well, and engage in different ways. So thanks for that. Really, some companies I know already, some that I don't know much about at all. So we'll definitely go check them out. Given that you've got a very clear thread in the type of investments that you make, I want to talk to you about the kind of founders that you invest in. What are you looking for? What are the key traits?
Every day that goes by, we become more and more founder obsessed, management team centric. We apply one, not that simple, but one simple question at the end of every diligence process, which is this a founder? Is this a management team whose future earnings we want to own a stake in, regardless of what they're pitching us at the moment? And if the answer is no, then we scrap the investment. And ideally, we would ask ourselves that at the beginning of the process, but you kind of need to go through the process to know what the answer is sometimes. Not quite as rigorously, but another test that we apply is, do we kind of want to quit our jobs and go work for these people instead? At least a little bit, maybe not all the way, and sometimes there have been ones we're so excited about where it does become tempting. But that is the level of excitement and inspiration that you as a founding team will need to embody to hire great employees, to bring on future investors, to convince regulators and advertisers and customers and clients and all the things that need to go well, all the people who need to be inspired by your vision. We think it's a good proxy to see, are we so inspired that we kind of want to quit our jobs, which we like very much, to go work for them as well? And when the answer to that question is yes, that usually is a positive indicator. Both of those things obviously are fairly subjective. So maybe to make a bit more concrete, we love what Paul Graham calls relentless resourcefulness. I love what Doug Leone calls clarity of thought or clarity of vision. We like to see resilience in the face of adversity is always a great one. Exceptional communication skills are key. Founder market fit in general. We give the Pool House guys an 11 out of 10 on founder market fit. We can't imagine a better team that we could design ourselves to execute this business model. And that's the level I think that the bar is at these days. And then one we've been thinking about more lately is I think a great founder needs to be capable of being some sort of emotional ballast or buffer or something like that. Any founders listening to this, especially any solo founders, will know that the life of a founder is very much an emotional roller coaster. And it's not even a roller coaster because you don't usually even spend that much time in the middle. You're either panicking and desperate and everything is crashing around you and failing, or you're on top of the world and you're the smartest person ever and you're, infinitely optimistic and you don't know how, you just flip flop between the two. I think if a founder were to tell their investors or their employees in the moments of their greatest panic or their greatest optimism, how they were truly feeling in that moment, I think their investors and employees would run away and think they were bipolar and think they were unstable and living life at extremes that are just unmanageable. Because if you're not living and breathing something that is your own sweat and blood, you usually don't experience quite those same highs and lows. On the other hand, you have to be transparent with your investors and employees. Obviously, it's not only the right thing to do, it ends up being the profit maximizing thing to do. People need to trust you, trust that you're giving an accurate representation about the status of the company and its prospects. And I think figuring out how to be a founder who's experiencing the highs and lows that even the most even-keeled founders experience, and knowing how much of this and at what time do I pass along and share how I'm feeling about the company and where things stand. There's no textbook, there's no Google search where you learn how to do that. I think it is much harder than people who haven't been in the situation would ever expect when you've really put your life's work into something and you feel like it's either about to fail or about to have a breakthrough moment, how hard it can be to modulate those emotions, but do so while still being transparent and reporting to your board and giving your advisors the ability to help guide you. And that's one, I think more recently, especially coming out of a tough time that many companies have had, first going into the pandemic, then a peak in valuations, and now a trough in both valuations and capital availability. Those are some, I think, really important skill sets or qualities that we look for in great founders.
Fairly simple checklist, Lloyd. You rattled off easy peasy. This founder luck. But what I love about that answer and really well articulated, I have to say, give you props for that. Is all a lot of the soft side stuff. I mean, there's the hard side stuff, which is that the business has to demonstrate the market, the dynamics, and metrics, etc. But from the founding team, you need all of that. Do I believe in this person? And are they able to elicit that response from not just an investor group, but from their team as well? Because these are the biggest problems, and it's the toughest thing. Raising a child is the toughest thing, right? I mean, for any parent would probably second that statement. A startup is no different. So for a founder to do it and do it with conviction, yeah, that's a monstrous task. So fair play on that answer, Lloyd. We've motored through the last half an hour or so. So I want to focus on the future. What's coming up in 2025? What are we looking ahead to?
A lot of exciting things, pretty much none that I'm ready to announce or talk about here. We actually have another investment that we're leading in the, I'll call it experiential entertainment space from a completely different angle than Pool House that we'll announce not too long from now. Pool House is one of these deals that closed almost a year ago and it's just being announced now. And then funny how these things work. We're going to have another deal that just gets announced in quick succession, but there's actually quite a lot of a gap and quite a lot of work in between those two things, despite what upcoming press releases might suggest. We are interested as both industry participants, sports fans, and students of financial history to see what is going on with prediction markets in the US right now. The CFTC will be coming out and making some significant rulings as to what types of sports and event related futures contracts might fall under a federal securities purview rather than what has till now been the case, which is a state-by-state sports betting regulatory purview. Really fascinating implications with groups like Robinhood and Kalshi now in the mix. Obviously, AI is a hot topic, and seeing how different companies are building models, fine-tuning models, wrapping AI is very interesting to see. More than anything, we are excited about not anything specific as much as we are excited about talking to great founders who tell us what we should be excited about. We have views that we have on the world and on maybe how consumer behavior is changing and what technologies might be more and less popular in the future. But if we had a crystal ball, if we knew what was going to be the next big thing, we would be building it as company operators, not investing in it. We feel like our job is to find people who tell us what the next big thing will be. If there's already a keyword, if there's already a buzzword for it, as seed Series A investors, sometimes it might be a bit too late. And we're just very excited to see more capital flowing into the ecosystem, more funds of various stages popping up every day, more sports team ownership groups that seem to be getting involved directly in venture capital and private equity investing. And for us, that just means more great founders that we can meet and who will tell us why they've discovered a secret or an angle or a trend that they are uniquely positioned to execute on and build something that will be critical to the future of the ecosystem.
Sports is hard. There's no denying it. And therefore, sports innovation, sports technology, whatever you're going to call it, is going to be hard. And I'm a firm believer that this market of the next 5, maybe not even that long, is going to start delivering some exits. And I think that's critical to attract further capital, even in this kind of dry environment where the overall venture climate is a bit slow and circumspect, understandably slow. The global environment is questionable to say the least, but business needs to be done and it will be done. Sports is going to be a big driver of that. So yeah, to just second your point, yeah, something that we see more investors, more companies, and some exits will follow surely. Last one for you, Lloyd. I'd like to believe we're all sports fans first. So I want to know what has been your favorite sporting moment.
Always like an iconic player's very last game of their career. Derek Jeter, as a Yankee fan, finished his career last game at Yankee Stadium with a walk-off hit. Kobe finished his career with a 60-point game. Those are pretty cool. But I might say, again, as a Yankees fan, and I think many Yankees fans roughly my age will have a similar answer, which is in 2003, Aaron Boone hit a walk-off home run in the seventh game of the ALCS against the rival Red Sox to push the Yankees into the World Series. It was 10th inning, extra innings, walk-off home run, game 7 of the ALCS. I was also a kid at the time, and everything is better when you're a kid and when you're a younger sports fan. So Jeter and Kobe's last games, those are pretty good ones, and I would respect anyone who chooses that for their answer, but I'm going with ALCS game 7, Aaron Boone home run, pushing the Yankees to the World Series.
It's a great take, actually, a last game sign off, but surely that wasn't his last game then, because he went to play the World Series.
That was not his last game. You're right. I did not mean to conflate. I was comparing Jeter and Kobe last games. Very iconic, good answers, but a walk-off against the rival to push your team to the championship, whether it's your first game, last game, or otherwise, those are pretty damn good too.
Great, fair play. I'm not a big not a big baseball fan, so you can't say I know all those moments, but that's why I ask so that I can go up on YouTube shortly after and look them up. Brilliant. Thanks for joining us, Lloyd. Always appreciate your insights. Our conversations are always enlightening for me as well. So I appreciate that you share your perspective with our audience, and we'll keep an eye out for all those announcements that you have coming up.
Thanks for having me. Keep up the great work.
I appreciate it. That is a wrap for, I think this is the first in the series for the upcoming ecosystem report. I don't know where Casey will order it, but a great episode nonetheless. There's plenty more to come. See you guys next week. Cheers.
Thanks for listening to the Sports Tech Allstars Podcast with Rohan Malhotra. If you like our show, let us know and leave a review. And if you want to know more about us, check out sportstechx.com, where you can find our latest industry reports and updates. For a deeper dive into all things sports tech, check out our comprehensive database, SportsTech DB, at sportstechdb.com. Don't forget to follow us on social media. You can find us at SportsTechX on Instagram, Twitter, LinkedIn, and Facebook. Join us next time for another insightful conversation with a leader in sports tech.